Welcome to Frost & Sullivan's Growth Podcast. In each episode, we unpack the forces shaping competitive advantage, risk exposure, and long-term growth decisions across industries and regions. Today, we explore alternative funding mechanisms reshaping the global startup economy, examining how digital platforms, decentralized finance, and performance-linked capital models are redefining how startups access, deploy, and scale funding in an increasingly global and asset-light business environment.
Why startup funding models are being rewritten. The global startup economy is undergoing a structural shift in how capital is formed and deployed. Traditional funding pathways built around bank lending, venture capital, and collateral-heavy models are increasingly misaligned with today's business realities. Digital-first enterprises, asset-light operating models, and globally distributed teams are scaling faster than legacy financing systems were designed to support. As a result, capital access, speed, and flexibility have become just as critical as valuation and control. Alternative funding mechanisms are emerging in response to this mismatch. What began as peripheral experimentation is becoming central to startup growth strategies across industries, signaling a move away from institution-led financing toward ecosystem-driven capital models shaped by performance, transparency, and adaptability. How aligned is your current funding strategy with the operating realities of modern digital-first businesses?
Alternative funding models. Moving into the mainstream. A new generation of funding mechanisms is redefining how startups access and scale capital. Revenue-based funding, crowd-lending platforms, decentralized finance architectures, robo-advisory-enabled capital allocation, and metaverse-linked financing models are expanding options beyond equity dilution and fixed repayment structures. These approaches leverage platform economics, blockchain infrastructure, and data-driven risk assessment to better align capital with real-time business performance. What unites these models is their emphasis on programmability, speed, and transparency. Capital is no longer just raised, it is embedded, adaptive, and increasingly linked to operational outcomes rather than static forecasts. Which alternative funding models are most relevant to your organization's growth stage and capital needs?
Strategic imperatives, reshaping the funding landscape. Several strategic imperatives are accelerating the shift toward alternative funding mechanisms. Disruptive technologies such as application programming interfaces, artificial intelligence-driven underwriting, and decentralized finance frameworks are streamlining onboarding, underwriting, and capital deployment. At the same time, industry convergence is integrating funding directly into digital platforms, marketplaces, and operational workflows. Broader megatrends, including digital democratization, evolving regulatory frameworks, and geopolitical uncertainty, are reshaping competitive dynamics and increasing pressure on institutions to balance innovation with compliance through adaptive risk and monitoring models. Are your capital strategies designed to keep pace with regulatory complexity and technology-driven disruption?
Growth signals, confirming momentum. Market indicators point to strong and sustained momentum behind alternative funding adoption. Demand for non-dilutive capital is rising as founders seek to preserve ownership while scaling efficiently. Digital lending and revenue-based models are expanding rapidly, supported by artificial intelligence-enabled risk assessment and reduced friction in capital deployment. In parallel, decentralized finance ecosystems are enabling global, always-on participation from a broader investor base. These shifts are reinforcing a move toward decentralized, performance-linked, and programmable capital models that operate beyond traditional geographic and institutional boundaries. How prepared is your organization to operate within always-on, globally accessible capital markets?
Growth Opportunity Spotlight, DeFi-enabled working capital in metaverse ecosystems. One of the most compelling growth opportunities is emerging at the intersection of decentralized finance and metaverse economies. As creators scale into microenterprises, managing virtual land, tokenized intellectual property, and recurring in-world revenue streams, demand is rising for liquidity solutions that match the always-on nature of digital environments. DeFi-enabled working capital allows creators to unlock funding against future earnings, tokenized assets and transaction flows embedded directly into immersive platforms. By embedding lending, revenue sharing, and automated payouts into smart contracts, these models support continuous cash flow management without reliance on centralized financial institutions. This shift is moving creator monetization away from one-time digital asset sales towards sustainable, finance-enabled ecosystems with real-time alignment between capital, governance, and incentives. What role could decentralized, programmable finance play in supporting new digital and creator-led business models?
Thanks for listening to Frost & Sullivan's Growth Podcast. For research, benchmarking, and strategic frameworks shaping the future of global finance and startup ecosystems, visit frost.com or reach us at hello@frost.com. We'll be back soon with more insights to help you stay clear-headed and growth-ready.